What's going on, everyone, and welcome to the channel. So we're going to be going over a trading strategy in this video that's going to allow you to collect easy income every single week. Now, it's not going to be a lot when you're starting out with a small account, when you're starting out with a small amount of money, but this can certainly add up, and it's a no-brainer for those who are looking to invest in the long term. Now, I know a lot of you guys are not really considering the long-term play here, and you're more so focused with making money right now. But what I also want to talk about is I want to talk about a bunch of SPAC plays, special purpose acquisition company plays, that I'm transitioning more into a longer term portfolio, not necessarily playing in my main short-term swing account. And so what I wanted to do is kind of go over my plan for these, as well as my plan to start collecting some more money and increasing this account a lot faster here as I move forward with my longer term holding. Now, this strategy can be kind of seen as a win-win-win in like 4 or 5 different ways, and I'm going to talk about each different way that you can make money. Now, every stock is going to be different. There will be some stocks that you can actually make money many different ways instead of just playing the stock price going up, collecting a dividend, and I'll explain what that means and how that works and what stocks would be best for that here in this video. So real quick, if you have not subscribed already, make sure you do so and smash the thumbs up button, guys. I appreciate every single one of you guys who do so, because I'm posting a bunch of videos here that I hope will help you as I kind of progress in my own trading and investing. Now, real quick, I do mention the Robinhood Wheel Strategy here in the title of this video. It's a very popular kind of strategy that people talk about, and I mentioned Robinhood, but you can do this on pretty much any broker that allows options trading. So it doesn't matter if you have Webull, if you have Robinhood, TD Ameritrade, Schwab, any broker, this is going to work. So with that all said, let's go into my computer and I'll actually show you guys how this is done in my Robinhood account, because I think it's the most simple and that's the most accessible to most people, especially because for me, my Robinhood account is where I have more of a longer term swing focused account, and I do trade some options in there, because when it comes to options trading, I will say that Robinhood has a pretty simple and easy to use platform. All right, so here we are inside of the Robinhood account. Now, this is actually gonna be really cool because I'm using this account kind of, and we can see that I do have SPAQ, and I wanna talk about what I'm gonna be doing with a bunch of other SPAC plays as well here in this video, because I know a lot of people are kind of concerned. They've been dipping. I think they're starting to bottom out. Today we had a decent day across most SPAC plays. But with that said, SPAQ is a perfect example of how I'm doing this here, or one of the ways that you can utilize this strategy. And let me explain. So what I did with SPAQ, now the key here with at least this strategy is that when you're selling covered calls, which I have a video on if you guys want to go back and check that out specifically, but this is going to be kind of like a more fun and easier, hopefully to understand video. So this is pretty much the game. You have to have 100 shares of the stock to sell the calls. Now, you don't have to necessarily just sell the calls. Of course, you can have a stock that just collects a dividend every single month. But the reason why I said weekly in the title and why I mentioned that is because with a lot of stocks, you can sell the options every single week. So if, let's say you had 100 shares of Apple, now that's a different type of example. You got to have a good amount of money to have 100 shares of Apple. So this is not for the small accounts, right? But let's say that you had 100 shares of EVFM. That's a perfect example. EVFM is one that I'm looking to do actually, and it's a great example. So now EVFM is great. The only thing is EVFM options are not weekly, so you need to have something that has weekly options. Or if you have a bunch of different stocks, you can do this for each of the stocks. Now there are going to be a couple requirements here. Number one, these are going to be stocks that you're going to be holding long term. So you want to be doing this with stocks that you're willing to hold for at least a few months, preferably a couple years, or just realistically long term. Like for example, for me, that could be something like Apple stock, could be potentially AT&T stock, some that I'm looking at right now, potentially Rocket Mortgage that I'm looking to get into, and then a bunch of SPAC plays. Now the SPAC plays are a little bit more risky, but again, when you do this with a bunch of different things, you can start stacking this every single week in certain stocks that'll have options that expire every week. You can do this every single week. It doesn't have to be a monthly thing. But again, that requirement is that you must be invested long term or actually believe that this price will go up. Now, ideally, it's good to do this in a bull market because you'll be making the most money, but the ideal time to buy these stocks will be on any dip. So of course, when we had that massive crash back earlier in the year, that would have been an amazing time to scoop up a bunch of different companies. But of course, hindsight's 2020. So for me, for SPAQ, I knew this is going to be a couple month hold. So let me go into SPAQ and show you. You need to have 100 shares. So yes, for this specific stock, yes, it did kind of cost me over $1,000. Now, for you, if you're looking to get into a stock like this, or if you're looking for a reason to add up or average up or grab some more shares of a stock like this, or any stock that you're kind of close to that 100 share mark, here's a great reason why. Now, this stock is not going to earn you a dividend. Unfortunately, you don't get a dividend. So that eliminates one of the ways to make money, but we can make money, number one, on SPAQ going up, increasing in value as we anticipate going to that merger date, right? That's what I'm anticipating. That was the idea behind this trade. Number two, we also can earn money from selling calls. So now I have 100 shares. What can I do? Well, I can go into trade options, which I did, and I actually have an example of me doing this. And what I could do is, which I did for October 16th, I took the 25, that's why there's a -1, I sold the $25 calls. Now, at the time that I sold them, they were $1.75, which equates to $175. So I was credited, at that time I sold it, $175. Now, what happens here is if SPAQ is under $25, by the end of the day on October 16th, nothing happens. I already got my $175. I also have the shares, and nothing happens. The option expired, and it expired worthless. So instead of me buying that option and having to risk having that option expire worthless and me paying $175 at the time and losing that entire value, I was credited $175, and in a sense, I bet against the stock going up to that price, but I'm also not, because here's what happens. If SPAQ was to go over $25 and it was to actually expire and someone executed that option, what happens? Well, I got the $175. I could technically buy the contract back if I wanted to and pay more for it if I didn't actually want to sell the shares, but I'm not going to talk about how complicated that gets. I will still capitalize on the gain of SPAQ from my current average to $25. So from where I had that, that's essentially a 100% gain. On top of capitalizing on a 100% gain, I would have still been able to collect that $175 when I originally sold the contract. So that was an absolute no-brainer to me because I believe in the stock longer term, or at least, in the next couple of months for a swing trade, and then I was going to get paid to hold the stock. And worst case scenario, I would have been taking out my 100 shares at $25, which would have been a 100% gain, and on a $1,000 or over $1,300 position, I would have made, in about a month span, a little over $1,000, about $1,500 after you factor in me selling the contract. And I was like, that's a solid trade. If I do that in a month with that one, with that amount of capital, I'm going to take that and I'm going to move on to the next one. No worries. Now, not every contract is going to be as inflated as that was. I actually did this the first week that SPAQ came out with options, so they were a little bit inflated at the time. But this is just showing you guys the example. Now, what you could also do is do this for puts. So you could sell puts. Now, when you sell a put, for example, if I was to sell a put for SPAQ, yes, I will get the credit for this put. The only thing is that I have to be willing to buy this stock at the strike price, because that can happen if it does get executed, because I'm selling it. So if someone who bought it executes it, I'm going to be required, right? I'm obligated to buy those shares of the stock. Now, if it's a stock you're going to be buying long term and you don't care because you know what? I like Apple. I'm going to buy that stock. I want to play it long term. Let me sell some puts. I'll make some money right now. If it gets executed, that's fine with me. I'll just get some more shares of Apple in my account and I'll ride that out for the long term. Maybe I'll even sell some calls right after that. So that's two ways right there to make money by selling options. Now I have AT&T pulled up right here on the screen. I don't even remember when I bought AT&T, but I must have bought it before the crash because it's still down on me. But the crazy thing about AT&T is that a stock like AT&T, not only can you make money on AT&T going up, for example, it's up 1% today, a little over 1%. You can make money on that. You can make money on the dividend, which is at over 7%, which is a solid dividend, I may add. So you make money on the dividend every single quarter. And then guess what? I go to Trade T Options. I can come in here and I can sell AT&T calls. Now this expires the 16th, the 23rd, the 30th, the 6th, and this is a weekly play. So what I could do here is if I have 100 shares of AT&T, now that's going to cost me a little bit of money, right? If I have 100 shares Every single week I can come in and say, hey, I don't think AT&T is going to be going over, $29 or $30 or whatever it is, or maybe $29, right? If AT&T stays below $30, I'm going to collect $12 per contract that I sell. Now, this is not a lot of money, but it's an awesome way to kind of boost your portfolio. And even if it's $5, $10, $20, $100, depending upon the contracts and the volatility and stuff like that, that's money that you could be taking advantage of to grow your portfolio, to grow your long-term portfolio, to then buy more AT&T stock, to capitalize on more dividends, to capitalize on more of a move up. And so it kind of compounds in its snowball effect. And this is a really cool strategy that a lot of people don't actually understand when they first get into long-term investing, to trading options. They don't even know this entire side of things, which is a very, very safe bet, especially if you already have the shares and you're just selling calls. It's an extremely safe way to go because worst case scenario, before you make the trade, you're already going to be locking profits in. The only way this goes against you is if AT&T stock crashes to $20, you get paid $12, but then you have 100 shares and it crashed to $12 and you lost like half your money because AT&T stock crashed. But again, if you're playing solid long-term companies, this is an amazing strategy just to keep making even more money. It's like paying yourself a second dividend on top of the dividend that you're already getting paid by holding these shares. So now really quick, what is my strategy for a lot of SPACs? So really quick, I'm actually looking at a bunch of different SPAC stocks, and this is one of the stocks I'm also looking at. And so what I'm planning on doing is, because they're taking longer, they're getting manipulated, there's a lot of stuff. I'm going to be picking a handful of stocks that I like. This is the merger with Canoe. I also like PIC, I like SPAQ, there's LCA, there's a bunch of other SPACs. And what I'm going to be doing is starting to grab some shares of SPACs in this portfolio and doing the exact same thing that I've been doing with SPAQ. Now for these SPACs, it's going to be a monthly thing. So I'm going to be buying 100 shares and selling out ahead. Now I'm waiting for more of a pullback. We've had some up days, so I'm waiting for more of a down day if we get it. Again, if we do get stimulus news over the weekend or something, that is the risk that things can go flying. So that is something that I do want to take into account. But let's say I go into HCAC, the merger with Canoe here, and I was to go to options. Now, of course, this is expiring next week, so I would be looking for the November 20th options. But again, if I was to buy Canoe, right, and I bought this at $10.58, I bought 100 shares, a little over $1,000, and maybe I wanted to go out to the $15 options or the the 1750s or something, I would go in here, I would just make sure that there's open interest, that there's volume. Okay, we have some, and I can get rid of this maybe tomorrow for $20, and it's an extra $20 that I'm going to get paid. And if HCAC is over $15 and then this gets executed, well, guess what? I still made a couple $100 on the play, and I'm going to be happy with that anyway. And so that's how I'm going to keep going about these SPAC plays, and you can continue to do this and ride the stock price on up as the stocks move up. HYLN, another stock that's been heavily kind of held back, manipulated, pushed down, sold off, whatever you want to say. This is one of those stocks that's another great example that you can be grabbing these shares and riding this stock for the long term. The more I look into HYLN, Hyliion, I like it more and more based off their business model, the CEO, and all the things that they have going for them. Yes, they've pulled back because they haven't had any crazy, awesome, exciting new news to announce, but long term, if this company lives up to their revenue expectations, this stock will double. It will be much, much more than just a double from here if it can kind of sustain itself and live up to those revenue expectations longer term. So again, it's a longer term play, but this is how you can make even more money off of these plays. Now, this is a more volatile stock, so let's take a look at these options really quick and say, okay, well, let's say I was to sell the November, or these are now weekly, so they have weeklies. This is a perfect example. If you had, now you have to have about $3,000 because you got to buy 100 shares, right? So if you had $3,000, right, to go into HYLN, okay. Now what you can do is, right, this is next week, so okay, if I don't think it's going to get $34 by next week, I can make $123 right now, right? Okay, let's push it out a little bit. Let's go the week after that. And you'll start to see that these option premiums are a little bit more inflated. So if you're fine with taking a profit or taking profit on your shares at $35, you'll get paid $173 right now to take profit there if it was to get above $35 by the 23rd, and again, you will still capitalize on this gain. One thing to note of how this could really hurt you is if, let's say, HYLN or any stock you buy, let's say, you bought these or you sold these options at $35. And let's say HYLN by this time is at $100 for some crazy reason it runs up to $100. Yes, you would have been taken out at 35, so you would have missed that move from 35 to 100. So yeah, you would have missed out on some money there. So just understand that going in. And And be careful selling things that are too close to where the current price is, because you may have a higher chance, or you will have a higher chance of being taken out or that stock actually hitting that price. But these are going to be some great opportunities just to make some extra money and really earn easy income weekly. It sounds kind of scammy in the title, but it's so true, and it's such a great way to kind of bolster your long-term portfolio. So hopefully this video helps you guys out. Please make sure to subscribe and hit the thumbs up button. I appreciate every single one of you guys. I am posting tutorials in the morning hours that I can kind of batch film, and then I'm posting more updates in the afternoon when I have a chance to come film a video. So please make sure you're subscribed and hit the notification bell so you don't miss when I post a video. Links down below to get 2 free stocks with Webull when you deposit $100 into your account. Also, there's a bunch of resources and stuff down below. Check those out if you are interested, and I will see you guys in tomorrow's video. Peace.